to all of you. Thank you so much for joining us this Saturday morning. My name is Krishan Vishesh and I head the admissions team for the CFP certification program at the International College of Financial Planning promoted by Bajaj Capital. Today's session focuses on highly relevant and important topics. ETF as a financial planning tool for CFP professionals. We are truly honored to have with us Mr. Rishi Narang sir, a qualified certified financial planner and a Master of Management Studies Finance. He brings over 15 years of experience in financial planning, research and advisory, having worked with some of the biggest asset managers, hedge funds and wealth management firms in the industry. Ladies and gentlemen, let me briefly walk you through today's webinar structure. Starting 40-45 minutes, Mr. Rishi Narang sir will take you through an in-depth discussion on ETF as a financial planning tool for CFP professionals. Following the presentation, Rishi sir will also brief you about the CFP Certification program and how it can add value to your professional journey. To ensure a smooth session, all participants have been kept on mute so that everyone can clearly hear out speaker. However, please feel free to post your questions in the chat box at any point of time. We will ensure that no questions goes unanswered. At the end of the session, we have reserved 20 minutes for a dedicated question answers round where you will have the opportunity to ask your queries directly from the speaker. Once again, thank you for joining us today. Without further delay, I now invite Mr. Rishi Narang sir to begin the session.
Thank you, Krishan, for inviting today and for such a lovely introduction. So thank you everybody for joining in today morning, and I'm sure you're very excited to listen to me on my thoughts on ETF and why is it a very why it's a very important investment tool today, for advisors themselves as well as to guide their clients. So I think I'll just share my presentation and just let me begin it shortly. Okay, so is my presentation visible to everybody?
Yes, sir.
Yeah. Okay, great. So ETF as a financial planning tool for CFP professionals, friends. Okay, let me go to the first slide first. So what is the size of the ETF industry today in India? You must be very surprised to know that it is roughly around 11 lakh crore. It's huge. Mukesh, can you just mute because there's some background noise, right? Okay, so 11 lakh crores is not a small investment product.
Rishi, please unmute yourself. I just.
Yep. Am I audible now? Yep.
Perfect.
Okay. So 11 lakh crore, friends, is not a small sum. So it very, very clearly means that ETF today, exchange traded products are the mainstream. They are into the mainstream. And that is why I've taken this topic today to give you much more sense as to what we can use this tool as for our clients, as an advisor. Now, was it this big? No. There's been a huge jump, friends, in the interest of the investor community in the last 5 years, I would put it. It was just nothing, but it's really becoming a mainstream now. Right. Now, if you look at it, friends, if I just look at the composition, right, out of what is the total uh, mutual fund industry, AMC, the asset management industry, AUM today, it is roughly around 80 lakh crores, right? So this ETF out of which is becoming a bigger chunk, it is right now somewhere around 14-15% ke aspas hai, right? But the expectation is it will become bigger, and I will tell you why. Okay, so that will be a thing that we'll discuss in the next slides. But first, let's look at some other facts. How many ETFs do we have today listed on the stock exchange? It is 311. For someone who is nuance, who wants to understand कि ETF होता क्या है, what is an ETF? So exchange traded product, exchange traded product या exchange traded fund बोलते हैं इसको. इसका meaning होता है this is just like your mutual fund. The only difference is this is available for trade on the stock market. Okay, so just like any share you want to buy, let's say you know how to purchase or sell Reliance ITC, Similarly, you can make an investment or you can then exit your position in the stock market for your investments in ETF. So it is just like that. It's a mutual fund, but it is available for trade on the stock market. How many do we have listed today? It is 311. That's why I was using the word listing. A very interesting phenomenon, if you look at it, is uh, 93% of the ETF accounts today are retail accounts, right? So what does it denote? It highlights the fact that it is not just the institutions who are reallocating capital. Now, we all have to understand this thing, and I'm sure we all understand it, that institutions are always way ahead than the retail investor in terms of understanding, visioning, and so on and so forth, right? Because they have much more tools and resources at their end. But a very strong point in the favor of ETFs today is that 93% of the accounts, ETF accounts, which are actually buying and selling ETFs is retail accounts. So it very clearly gives a message that, everyday investor, all retail investors, Aam Admi, like me and you, they are also shifting towards structure and cost efficiency. Right? So it is something, and this, friends, signals maturity. This signals maturity of the Indian financial system. It signals maturity of the Indian retail investor today, that they are understanding what is right for them to make investments. And that's why you see this ETF today has taken up a lot of traction. Okay. And if you ask me personally, one message on this slide from my end would be, I am seeing a structural shift today in how portfolios are built in India. Investors are aware and they want the best in terms of the product, the structure, and no friction. I'll explain what is the meaning of friction here. So, very, very clearly, the message is that yes, Indians today want the best of the best products in their portfolios, and that's why ETF being one of the best is really gaining traction. Let me go to the next slide now. Friends, there was a time that a common feedback that used to come for ETFs, exchange traded funds, used to be that, liquidity नहीं है market में. Stock market में listed तो है, but if I want to, let's say, purchase some ETF or I want to sell, there used to be some issues in terms of liquidity. Thanks to the deepening of the financial system and the, increased interest in the ETF space, just look at the screen and see the numbers that you can see. What is the trading activity? The trading activity for 24-25 was close to 3.9 lakh crore. And very surprisingly, this year, from April to December, we've already crossed 4.55 lakh crores. So this, when I see these numbers, this again puts me to the point that yes, there is more liquidity in the system today in ETFs. It is not, I think, gone are the days when we used to get stuck. And I'm not really majorly concerned about, one thing is, of course, that liquidity has to be there. But, if trading volumes have expanded, what it really helps is it reduces the bid-ask spread. Now, what is the meaning of, friends? In simple terms, bid-ask spread का meaning होता है कि buying price और selling price के बीच में gap है. And if that gap is bigger, that impacts my returns on a long-term basis. If I'm a long-term investor, it impacts me. Because of, this trading volume has increased in ETFs. So now the spread is on a mota factor, if you ask me, which I was computing, this is roughly around 17 basis point. Please understand the point, everybody, guys, that 100 basis point का मतलब होता है 1%. तो ये how much is कितना रह गया? Now it is roughly around 17 basis point. And when I see certain large cap ETF categories, it is almost like 5 basis point, 0.05. So it's almost negligible हो गया. This is also a positive sign that if I, as an investor, invest in ETFs today, right, on a long-term basis, this the coming closure of the spread or the reduction in the spread is going to also compound my returns. So it's a very positive story on the ETF front. No challenges when you ask me now, there is no challenges in the ETF space. It is it is an efficient product and which is all towards bringing returns to you and to your clients. Let's go to the next slide now. Now the next question that I have is, which I'm sure all of you have, is do ETFs really deliver benchmark efficiency? So I just answer one question from Vadi Raja. Vadi Raja ji, the trend has increased. If you see, what I was trying to show you is it is moving towards a time when this is going to be one of the most liquid products. In many of the categories, it is already reached, but in few categories, of course, you would find. I'm sure you would really appreciate the point that when you talk about, let's say today, a gold or a silver ETF, there is no concern on liquidity. It's a hugely bought or traded product today, right? Let me go to next point slide, which I was saying is, so why am I talking about ETFs today? Do they really deliver efficiency? So yes, if I look at the last 3-year ETF returns, friends, it has been roughly around 10.35% average. This is better than the 3-year index funds. See, what I'm really doing here, I'm trying to compare ETF, which is a passive investment scheme, with an index fund, which is also a passive investment scheme. And of course, ETFs have done better, right? But my question is not really on that that there is a winning that has happened कि 3 years के return में ETFs ने क्या किया है, 0.5% of extra return दिया है. That is okay. That will happen. My highlight is something different here. So what I'm trying to tell you here is that, you know, it is not that it is a much smarter product than an index fund. It is not a much smarter product. It's almost like a similar product, but on a structural basis, it is a efficient product. It is much, much cheaper compared to an index fund. And that, friends, cost also compounds quietly. So that is also something on a long-term basis. Yes, it makes a difference. Now, if you have, let's say, an ETF which is available at 5 to 10 basis point, and then you have, let's say, an equity mutual fund or maybe an index fund which is like 50 basis point, there is a gap. There is a difference. So structurally, this is more cost effective. We all can understand that much. ठीक है, एक ये पॉइंट हो गया फेवर में ETF के. And the second thing, friends, which is also there is, friends, is that active fund challenge. What is the active fund challenge? 90% of the large cap funds have underperformed the benchmark over the last 3 years. So if the active schemes are not really able to generate an alpha, right? Not able to generate an alpha, which means a better return than what the benchmark is giving us. Why shouldn't an investor then look at the other side, which is the cost? कि active funds में तो वैसे भी they cannot, and this is very, very clear, it is law of averages that you cannot have a something which is going to perform consistently better than the benchmark. So if that is the case, then why shouldn't a customer look at an ETF which is much more cost effective, and on a long-term basis that effectiveness is going to help in compounding of returns. When alpha is scarce, cost control becomes strategy, and that is what the Indian investor is doing today, right? So very, very clearly, it is certainly an efficient product, not in terms of design, but in terms of cost. And when the active funds are, as we all understand, that they will not be able to perform consistently on a long-term story basis, right? Why should I then go with something which is expensive? Let me go to the next slide. Gold and silver. These are the most hot topics today. And as a matter of fact, friends, we see there's a surge in investments by investors in the gold and silver ETF. Right. So in terms of composition, friends, nearly 20% of the ETF investment, which I said is roughly around 11 lakh crores, is into gold and silver. As a matter of fact, a strong statement came from the investor community in the month of January 26, when the inflows, actually the total inflow in gold and silver ETFs was higher than the inflow in the equity ETFs. That is very surprising, right? Because on one side, as an investor, you're looking at that the markets are still not really very favorable in terms of returns. But on the other side, yes, of course, the commodity bull cycle is there. While if you ask me personally, I do understand that the kind of cycle in gold because of the dollar weakness, global, and dollar weakness, and let's say also about the geopolitical issues and geoeconomic issues. Right. So, and plus, central banks have been purchasing gold, including RBI. So there, of course, there is something. But silver, of course, personally, if you ask me, is more speculative. But still, the investor community is putting a huge amount of money in the ETFs of precious metals, which is gold and silver. Why are they doing it? So if an investor today wants to purchase gold, what are the options does he have? What does he have? Like, let's say talk about the options. You've got options of buying physical gold. Friends, what about purity? What about risk? What about, let's say, the making charges? Next, sovereign gold bond. Yes, a good paper option of gold, but then there are no new issuances coming. Also, then in the latest budget, anyone purchasing SGBs from secondary market are now taxable. There's no capital gain exemption. And then when you talk about, you talk about any other way of doing it, you can't really do it. So ETFs, one of the most cost-effective mechanisms of investing in gold and silver is the way, and that is why there's a lot of traction today in gold and silver ETFs, right? I think there are one or two questions which I will answer before I go to the next slides. Developing country here, opportunity there. Why not active fund rather ETFs as compared to? See, I never said that, Mr. Ananta. All I'm trying to say here, just let me just go to my previous slide. All I'm trying to say is that on a consistent basis, active funds are not really going to give you that kind of return. So if you are a short-term investor, go for active. But if you're a very long-term investor, you understand the dynamics. You want efficient structure in your asset allocation. ETF makes sense. So I'm talking in terms of an advisor rather than someone who is just looking at, the India growth story. I also do understand the growth story, but when it comes to all the factors, it looks more efficient here. Vadiraj, ETF is index and passive pass. Why? What is new compared to mutual fund? I'll discuss about it, Vadiraj. Just give me a couple of more minutes, please. Thank you. Okay. Next, why ETFs are structurally efficient, right? Let's talk about this first. Now, if you look at it, friends, what happens in typical mutual fund, right? If there is redemption pressure, please understand one of the major points here. If there is redemption pressure and the fund manager is forced to liquidate certain positions, right? Then even if I am not requiring that redemption, I am one of the investors, I am also impacted because maybe I lost an opportunity of return. Maybe there is some kind of, there is also brokerage and transaction cost which I'm supposed to pay. Why? Because somebody is requiring redemption, which I'm not. But we all are in the common pool. This is not the case with ETF because the cost of liquidating and for the transaction is only with the investor who is going for it. So if I'm an ETF investor, if somebody else is also there, I'm not really impacted by what he does. He buys, he sells, that is his cost and his idea of returns. Second, I already told you it's about the lower expense ratios. Third is very important, critical is daily transparency. You can see the bips on the stock market, right? You don't really have to wait for the end of the day that after 9 o'clock, NAV will be released by the asset management company, right? And then arbitrage mechanism. What is the meaning of arbitrage mechanism? See, friends, unlike the uh, mutual funds, right? Unlike the mutual funds, we do have, in the case of ETFs, we do have certain market makers, right, whose job is to actually, try to uh, intervene when let's say the ETF price is going against, it's not really in sync with the intrinsic value of the fund. So then the idea of the market makers is just to try to, provide that cushioning so that if I have invested, I know that, I'm really getting, it's very close to the value, which is what is my expectation when I'm investing in an ETF fund, right? Because you can understand that demand and supply forces can really take the value or maybe make it deviate it from the underlying value. So this is something which is also there. So I mentioned to you already that ETF is as a product. When I see it, it shows me it is a superior structure, cost efficient, and it reduces friction. And if all these things are met, it definitely adds to my terminal wealth. I'm a long-term investor. My clients, if they are long-term investors, yes, this is something they should have in their portfolio. Let me go to the next slide, please. Yeah. Now comes the distinction between ETFs and index funds. See, I've tried to compare with active funds. You can understand this is ETFs versus index funds. Both are passives. Now, please understand the point, friends, that I'm not really here, I'm not trying to, put a comparison saying I'm competing against why ETF is in competition against index funds. No, not that. That's not the case. The case is it depends upon the requirement of the client, right? So if on certain parameters you would find ETFs are much stronger. So let's say, for example, intraday trading, yes, you can do that in ETFs. Index funds may you only get to know the NAV at the end of the day. In terms of cost effectiveness, of course, ETFs are much attractive, efficient as compared to index funds, right? But when you have to, let's say, buy and sell in ETFs, yes, there's also a brokerage cost is also there. So you have to balance both the sides of it. If I'm not really into trading of ETFs, then I'm not really concerned about that kind of a cost, which usually is marginal. Take it. In terms of liquidity, both the ETF and the index funds are liquid. It's not that one is better than the other, but there are different mechanisms of it. Right. In one case, it is T+1. In the other, it is you have to put your request to the asset management company, and with their respective tax, they're going to redeem your thing. One important aspect which here I would like to highlight is on the behavior side. Right. So what really happens is that in the case of ETFs, I've seen it personally as well with clients that you have to, really track the portfolio of the client here much more as compared to when you're doing it for a fund. Because please understand the case that if there is, let's say, for example, somebody was mentioning about a benefit of, let's say, active funds here. There you have a fund manager who is going to, redeem positions when mark or maybe certain sectors are not favorable. But here that job actually comes to the investor himself because this is passives are only going to, track a benchmark, right? So that is something there. But if an investor now, if I want to put it this way, if an investor of a client or a client of mine, if he's not really disciplined or he doesn't really understand these things, then of course I have to think twice before recommending him ETFs. So maybe my exposure to ETFs for him would be quite less than somebody else who is open to understanding the requirement of rebalancing and so on and so forth. Right. And in terms of incentives, friends, if you look at it, when you go and let's say you speak to any, product guy, you go and speak to, let's say, any mutual fund distributor, any relationship manager, they will always and always promote active management funds because, there's more underlying incentives coming on that. So a passive scheme or an ETF is not really the flavor of the month for them. Right. But for an investor or an advisor like me, a certified financial planner that you intend to become, you will have to look at all the things together. Okay, let me go to the next slide now. So what I've done is since when I was preparing this presentation, I thought I will also try to bring in two model portfolios for you. Okay, so I've taken two personas, which is the kind of two clients that you can definitely get. So what is happening here? There's a guy named Arjun. He's 30 years old. Income is 15 lakh rupees, monthly surplus. So which means he's able to, after his expenses, he's able to, get a free cash of 40,000, 40K, 40,000 rupees. Doesn't have any liabilities on his head and has a long-term horizon of 25 years, right? In terms of typically in our process, we definitely do a risk profiling of the client. And in this case, let's assume he's a high risk tolerance uh, client. Okay. So what is a typical now if I want to just bank on ETFs, I've given him that explanation. He's like he's okay to work with me, and he wants me to, put up a asset allocation structure for him. And if I only have to, let's say, look at ETFs, what will I do? You have ETFs for both equities, fixed income. You also have it for precious metals, I was just discussing. So if I just restrict to this, right, what do I really see here? See, everybody. So I've given him an exposure of 65% to equities, right? Because he's got a long-term horizon. He's a high risk tolerance. So broad market ETF is roughly around 45%. What is the meaning of that? It means that this will help his portfolio capture India's structural growth. Coming to a 20% exposure to mid caps, why did I do that? Because I thought that why not give him some more, teaser or more benefit of growth potential of the mid cap space. We can all understand, right? The companies in India are in a transition mode right now. So mid caps are going to become large caps, right? So why not take their good growth, high growth potential in the system, and then of course they will become one of the part of the large caps in few years, because my horizon is long term. Another thing to also look at here is that, these days somebody asked this question. I would advise that you should use international ETFs for taking exposure and reducing the concentration risk. Right. Now, if you look at it this way, 24, 25, Indian markets did not perform, but the world equity markets performed very well. The Americans did very well. The Japanese did very well. So why, it's a good way of taking exposure to the international markets and also reducing concentration risk. Coming to my favorite, gold, of course, gold should also be a part. I've given a 10% exposure here because to manage the inflation, it's a hedge against inflation, also a hedge against uncertainty. There should be an exposure to gold. And coming to debt, of course, 10% I've given because, just to see that it is going to help in smoothing the volatility of returns, right? And also supports rebalancing. Because if I want to reduce my exposure to equity, where I see in this portfolio, of course, debt can be increased as per the requirement or the way the markets perform. So this is a kind of a model portfolio, I feel. One major point here, friends, which I want to again highlight, I always do it is, you don't need to, you as an advisor have to be very, very good at structuring of the asset allocation, right? In terms of the requirement, in terms of what is the exposure. I mean, we are in India today, so this is the kind of a model portfolio I can look at. If I was working, let's say in Japan, I would have a different thing based on the performance of historical performance of asset classes and the future growth potential. So this is what I see, which is going to be for someone who is based out of India and he's a young chap. He has time with him. So for Arjun, if you ask me, the biggest asset is time, right? And I always say this, it's not required to time the market. Please give time to market. If you are disciplined, your client is disciplined, he's got a good structure. I think wealth creation will not be a big challenge for him. Let me go to another side of the story, another persona. Here we have Meera. She is 52 years old. Retirement is coming, so she's somewhere, 8 to 10 years in retirement space. She's going to be there. She's a little worried. So example, so portfolio is roughly good. She's made some money. She's roughly around 2 crores her portfolio. One of the priorities that she has is drawdown control. So what is the meaning of that? The biggest thing here for Meera, friends, is the biggest risk, as I see, is a sharp drawdown before retirement. Right. So let's say if at 58, the market plunges down by 30-40%, it's going to really impact her retirement corpus and her retirement life. Right. So one of the major concerns that I can see for her, what do I do? Do I really eliminate equity in her case? No, not really. I wouldn't do that. Equity has to be there, friends. The engine has to be there because otherwise, you cannot really beat India's inflation, right? You cannot really beat India's inflation. You are aware, right? ICFP is part of Bajaj Capital. The founder of Bajaj Capital, KK Bajaj Sahab, has always said one thing. One fundamental thumb rule for all his investors has been try to, or maybe for his employees, has been try to help the client beat inflation. So that is the reason that with that ethos in mind and my understanding of inflation, I will keep exposure to equities even in the case of Mira, right? But it is going to be drastically low compared to what was there in the case of Arjun. Different personas, different dynamics, different solutions. No same solutions can work in both the cases. I have to be very sure of the allocation structure that I'm building here. So what happens here is broad market ETFs are given 30%, right? There should be some equity exposure, as I mentioned to you. But on the other hand, friends, if you look at it, I've also taken a 10% exposure to low volatility ETFs. Now, what does it mean? It means those kind of stocks which don't have a high beta, right? Stocks which are relatively stable, where while I want returns, I don't want them to be too volatile. You have low volatility ETFs from ICICI, one of the best ones in performance. You can always look at it and take an exposure, or maybe help your guide your clients to take exposure. Next, I want to give her more stable. I mean, I want to give her portfolio more stability. So then that's why a 35% exposure to debt ETF is important for her client capital preservation, because drawdown control has to be there. Of course, gold will always be a part. I'll always make it a part, 10 to 15%. In her case, I made it 15 because I couldn't bring in that kind of an exposure to equity. So then from 10, I take 10, but I have 10, 15 here. I've also still continued in her case with an international ETF, 10% exposure for diversification. Because what I've even noticed these days, it's a very, very strong trend that we see that people have their kids going to foreign universities and all to study. So an exposure to ETF right at this stage, where I'm sure Mira's at the age of 50, your kids are about to go to, let's say, college and so on. So why not give her an exposure there, which reduces the unsystematic risk, which also provides diversification and maybe an exposure to something where one of her goals could be met. Okay, so if I want to summarize, friends, on the ETF discussion that I did today, see, this is what is my understanding of ETFs today. It's a passive, smart strategy, is cost efficient, but majorly, if you ask me, friends, fundamentally, see, you can see products can be anything. See, as an advisor, am I really a product guy? I'm not a product guy today, right? So, as an advisor, what I'm supposed to do? What is my requirement as a CFP or as a, let's say, a financial advisor? What am I supposed to do? See, products do not create outcomes. They will never. If you are a product guy, then you will always be a product guy. We have to build solutions. And for a client, what are the three parameters on which a solution can be built? Number one, I have to ensure that I'm giving him a good structure in terms of what product I'm giving. It is basically for his requirement. If an ETF does not work for my client, it will not work for him. Let's be very clear about it. Second is a behavioral shift, discipline. Discipline compounds. Consistency will always outperform predictions. You can be the best predictor of markets, friends. You can time the market. I am not with you on that. Give time to the market. Long-term, consistent wealth creation will only happen with discipline and with a good structural decision in terms of products, which is going to compound your wealth. And along with that, friends, beat any kind of a market, asset allocation is the king. Allocation defines outcomes. So I want to point in last 3 points of what I can tell you today is that in a noisy market, today's market is very noisy. Discipline is going to compound. Let's help our clients continue with their investments, not stop it. And this is a big challenge which the DIY investors are happening today, are facing today. They don't really know what to do. And we hear these news that a lot of the SIPs have stopped because they don't really understand that noise is impacting their good decisions of investments. And in a complex environment, environment is becoming complex. So thoughtful allocation will only, so asset allocation will only determine long-term success. ETFs are tools, mutual funds are tools, AIF is a tool, SIF is a tool, planner is the architect. So he has to decide on how he wants to, use the last summation point, three broad principles of structure, discipline, and allocation. And be it any kind of a market, of course, in short term, this will not work, but if there is time available, wealth can be created. Right? So, friends, this is my thought on the ETF. I thought I'll share a bit of it today with you, couple of slides in the initial part. And if you want to learn more about investment products and how do they really fit into the bucket of an investor, or how can they really help in amplifying the returns and wealth for an investor, you have to pursue the CFP certification. Friends, I'm myself a CFP, and a lot of the knowledge that I shared with you today, I got it when I was pursuing this program. So now, friends, I would like to give you some essence of what is the CFP certification, a bit about it, and then of course we'll be welcoming your questions. So just one second. Please suggest some ETFs in which we can invest as of now. See, PM, you can call me personally. I can then I can do one-to-one, but on this forum I will not be able to give you because I do have certain exposures, so that I can do it when we can do one-to-one, right? Okay, so let me come back to the CFP certification. So, friends, the CFP is the gold standard when it comes to personal finance. Okay, so anyone in the world today who wants to become the best advisor, right, in helping clients make money. I always say make money, wealth, or whatever you call it. It is the CFP. The certification is valid in 28 countries, and all of these countries are developed markets, right? So, yes, you can also pursue in multiple markets. I think they're trying to create that platform. It's a unique 4-in-1 certification program, friends, because what's really going to happen is that the recognition does not come only when you become a CFP. As you clear, let's say you've done with level 1, which is investment planning specialist, you get a certification, right? So the certification, the recognition starts right in your journey. And as I mentioned to you that it is a gold standard in personal finance. Also, you have to understand that we have two pathways to pursue CFP. I will mention to you about the requirements there and how soon you can do it. But typically, if you ask me, someone who there's a fast track pathway, someone who has the requisite education experience, which I will share later, can complete the program in 6 months itself. And maybe someone who's in a regular pathway can take around 8 to 10 to 11 months to complete it. What is the eligibility? Right. So it is basically 10 plus 2. So anyone who has, let's say, just finished with his 12th standard and he's gone into college, he's looking out, he's got some time for graduation, you can start with your CFP journey. So by the time you finish with your graduation, you're already a CFP. Think of it, I mean, how interesting it would be someone who's a CFP at the age of 25, right? Also, you also have to understand that, but for others, people like so it's an open ground for professionals who want to enter the BFSI space, professionals who are already working in the BFSI space, professionals who want to become leaders within their ecosystem. Like for example, if I want to give it at Bajaj Capital, as I'm aware of it, that any leader vertical has to be a CFP. If he's not a CFP, he will not be the head of the vertical. Of course, he can be a major position, but if you want to become, that's a prerequisite. Now, just want to give you a little glimpse about the program modules of CFP. Friends, we have, I mean, I'm here, I'm just explaining you the regular pathway, which has got 4 levels. Level 1 has investment planning specialist, personal financial management, and regulatory compliance. What happens basically? So, in case of investment planning, ETFs is part of that curriculum that I just explained to you. When it comes to personal financial management, we will guide you. The curriculum guides you to understand how do you assess the situation of a client, right? Assess his income statement, balance sheet, where does he stand, risk profiling, and then help him, shortlist goals, quantify goals, and then plan how they are going to be achieved. Very interesting. Coming to level 2, which is retirement and tax planning, friends, you will have retirement planning as the module. In fact, retirement planning today is one of itself, it can be a big business for you. Okay. And then you have is tax planning. So we will be training you on all the 5 heads of taxation. And then basically, because taxation, why is it paramount to understand as an advisor? Because the products you advise, they should all be in the favor of the client when it comes to taxation. It should not be unfavorable, right? So we have to keep an eye on taxation whenever we are advising clients. Coming to level three, it is risk planning and estate planning. Risk is basically insurance. You can help the client to build as much wealth as possible, right? But what about the downside protection? Does he really have adequate insurance covers? Maybe not. It's our job as advisors to help him understand that, find the gaps, fill the gaps. Coming to estate planning, see, friends, this is a unique module because we don't really have estate planning as one of the modules anywhere. What are we trying to learn here? We're trying to learn wealth has been created. You've helped him create wealth. Now, how is this wealth going to be transferred to the next generations? What are the rules, regulations? How do you really create a private trust? How do you, let's say, how do you really help him in terms of, defining a will or a gift deed? All that is going to be trained to you. Coming to CFP final level, friends, we've got two requirements here. One is that you have a 3-hour exam. Uh, and second is you have to submit a financial plan, a holistic financial plan to the board, right? The parent board, which is Financial Planning Standards Board. Okay. Why, once you've decided to pursue CFP, why should you choose ICFP? Friends, ICFP is the first and the largest premium education partner of FPSP India. Friends, in fact, way back in 2002, it was ICFP which brought in CFP program in India when they realized that yes, we need gold standard advisors in India, and that's why this mission started. Friends, ICFP has the highest number of faculties, and every faculty is not with a single specialization. They all are decades and decades of industry veterans with multiple qualifications. See, I would certainly, I'll show you my faculty in some time, and I'll even give you certain perspectives on that. Highest number of CFP certificates and passing percentages from ICFP. In fact, 100% passing percentage is something that we even achieved in certain levels in 2025. Level 1, level 3, many times we've done it. So we know we have the skin in the game because we brought it to India and we know how to get success to a candidate who joins us today. Friends, here is a slide on our faculties. Each one of them, friends, if you see, multiple decades of experience, recognized in the industry, coming from great institutions of India, right? So, for example, if I would put it, we don't put anyone who's not a chartered accountant and a CFP as a tax faculty. When it comes to estate planning, we will certainly put someone who's a CFP and, of course, has an exposure to law, right? So we keep in mind because we are not here just to give you, it's not a center to train you. We are here to, build a career with you. We are here to give you those ethos at which we are built, right? So give you market understanding to really make you a true advisor, one who can take care of almost every kind of a client, right? Uh, in fact, friends, just to let you know, because of all of our achievements, ICFP won Education Provider of the Year 2024-25 Torchbearer Award, right? The recognition even happened in 23-24. Miss Madhusena, the Academic Dean of ICOFP, right? She won the Educator of the Year award in 2023-24, consistently breaking records and winning rewards and recognition from the parent board. Friends, when it comes to study options today, right? Uh, we have our online classes, right? And I would just like to also give you a sense that, you got basically two pathways if you ask me in regular. One of them is where people like me, who are faculties who would come and train you for on Zoom platform, right? Which is like a virtual classroom conducting happening. The other part is which is the e-learning pathway, whereby you get access to our learning management system where you have uh, pre-recorded sessions from similar same faculties. It's just that it's in a studio mode. And why we have this e-learning pathways, because many times candidates are ones who are super busy and they can't really follow schedules. They want to, they prefer to go through the curriculum at their own pace. So that's why you have an option which is the e-learning. Now, on the slide, if you see, I'm just trying to highlight the learning resources at ICFP. ICFP has the most comprehensive learning material available in the industry. I was a student of ICFP. I could see the books and the material that came to me. So I cleared from here itself. Concept books, workbooks, and these concept books are not something, you would even find our books. They're the most, they are updated almost every year. We updated them in 2025 as well, right? Every concept book, for every module, you'll get a concept book and a workbook. Then, friends, you get access to the LMS where you have a host of features, which is mocks. Mock tests are available. Before even you come to the mock test, we have series of notes to be read. You get time, you should read those notes, that they will help you really, really well to be, to be prepared well. And then, friends, across the levels, you get personalized mentors. Mentorship is an industry first, which was done at ICFP, that we should provide that close handholding to each student. So you have mentorship, you will get calls from your professors, right? When you're preparing for the exams, they will share with you exam strategies. Strategy sessions are happening every month. So that, it's not that you've just joined and we are telling you, we are making you learn concepts. We are also giving you strategies on how you clear exams. Our goal is only one, that you should become a CFP, right? Now, here I want to highlight the fee for the program, friends. Now, on this slide, friends, we have the fee for the Financial Planning Standards Board. Okay, so if you look at it, friends, the registration fee is 18,000 rupees. This is valid for 1 year. This is a common rule across the board standards. Then, friends, there is ebook fee, right? For ebooks, friends, you don't have to pay it upfront. If you join one level, you will pay, let's say, 6,500 rupees for getting access to the FPSB books, which are online, and this is mandatory. So you have to take that. Once you're prepared, you know that you have to clear examinations. If you're on the regular pathway, you have to clear 4 exams. So for booking an exam, the fee is 8,000 rupees per exam. Okay, and for the CFP final, it is 13,000 rupees. As I had already mentioned to you earlier, that there is a financial plan assessment which happens in the final level, where a holistic plan is submitted to the board. The fee for that is 12,000 rupees. Okay. After you've done with all of this, there is also a 10,000 rupees fee, which is for specialist certification, right? So as you're in the journey, you would like to purchase the specialist certifications to get the recognition, and you have to pay 10,500 for all the three specialist certifications uh, to get them. Now, I had just highlighted to you something about a fast track pathway. Here, I'm trying to give you some more details upon this pathway, friends. The FPSP board, friends, does recognize that there would be certain individuals who can fast track the CFP curriculum because they are already in the system. They come with some requisite education and experience. So here I'm highlighting that to you. The first thing is, if you are educated, let's say you are an MBA in any vertical today, or you are a CFA, you are a chartered accountant, you are a ACCA, CMA, AICPA, right? Or you also, let's say, are a fellow member of the Insurance Institute of India. If you are any one of these, you can certainly go for the fast track pathway, right? Along with this, of course, you need an experience of 3 years work experience in the BFSI space. Once you have it, you will only have to go with the CFP final uh, exam and the financial plan submission. So the board is allowing such a person with this education experience to be excused from appearing in the level 1, level 2, and level 3 examinations. Okay, but please understand the point. It's not that we just straight away start with level 4. Any one of you must be thinking, I don't know anything. How do I really go to CFP final exam? We are going to we do have a structured preparation plan with us at ICFP. So we will initially give you 52 hours of live interactive sessions for all the modules, so that you build your basics, you get understanding of the of all the 6 modules, and then we will start with your preparation of CFP final. And that is the reason why I said that anyone who wants to clear CFP within 4 to 6 months can go with the fast track pathway. Now, coming to the fast track pathway fee, friend, there's a validation fee of 5,000, which means that the board is going to check your credentials and documents. Then there's a registration plus FPSP content fee, a common fee of 34,000, right? Rest, other three are the same, which is in terms of the financial plan assessment, the CFP final exam, and the certification fee, which is 10,500. They are similar to the regular pathway. Friends, on this slide here, now I'm showing you the study fee at ICOFP, right? For virtual learning, which is basically one-to-one interaction on a on a Zoom platform with the faculty, where you can ask your questions and keep it interactive with fellow participants and the faculty. The 4-in-1 combined fee is 60,000 rupees. When it comes to the e-learning, which is recorded classes for self-paced learning, the DIY model, the fee for the combined fee for all the modules is 45,000 rupees. Fast track pathway, where with based on your education experience requirements, you can go with only your excuse for the other levels, only the final level. The fee is again 45,000 rupees. So what you can do today, friends, is you can pay 15,000 and you can book us a position for you. Friends, since you've joined today on this webinar, we are giving you an offer. It's a very good offer. I'll want to show it out to you on the next slide. Flat 10% discount, friends, we are offering today on the virtual pathway, e-learning pathway, and fast track. So for all pathways, there's a flat discount of 10%. Along with it, friends, you will also get access to NISM 5A e-learning videos, friends. So this is basically the 15-hour NISM 5A videos will help you to crack the mutual fund distribution module. So it's an add-on as you pursue your CFP certification with us. And also with this, we are giving you 7 hours of premium recorded sessions for how do you really become a successful market trader, right? So this is also coming to you. We usually position these two programs at 5,000 rupees each, but today as a bonus with the offer of 10%, this is also coming to you. So if you ask me in a nutshell, you're saving roughly around 16,000 rupees uh, based on today's offers. Friends, we also provide, interest 0% interest-free EMI options through our NBFC partners. All you have to do is you have to pay 15,000 today and book your seat, and then you can also get your education financed through our NBFC partner at 0% interest, zero, and with 6 EMIs. So friends, we are here at 9711437779. You can call us to ask your queries, but we are also here. I and Christian are here today to, also solve any of your queries that you have for us, because we are here, we are live. So that's the end of my presentation. I hope I've not kept you on hold for too long, and we can take up questions now. And then I will also, if you want, I can even take up some questions which are there in the chat box. Christian, how do you want me to go? Bye.
Rishi, let's start taking the question. I can see a couple of questions in the chat box. Let's start
Okay.
taking one by one.
Okay. So, sure. One second. Vadiraja, I'll just come to you. I'm a this PM, I'm a CA finalist student and NSM certified mutual fund distributor. May I directly go to fast track? CA finalist, yes. If you have done CA inter and you've done articleship, I think you can certainly go for it. I would request PM, why don't you just share your resume and credentials with Christian and his team on this number, and we'll just get it done. I mean, we have JP who says I'm an MBA finance but no work experience. Can I opt for fast track 2009 pass out? JP, there is a requirement of 3 years in BFSI for a fast track. So I would suggest, why don't you go with the regular pathway, and you can even go for either the regular or you can go with the e-learning pathway based on how you want to do. Is there any renew fee to renew the certification? Yes, Anantaji, there is a fee of I think it's around 10,500 rupees for annual keeping the subscription of your certification on. Sir, Ayushi Parashar. Sir, I've done MBA marketing. I've worked with iDirect for a year, kind of career gap of 8 years. Absolutely, Ayushi, because we have a lot of students, and in fact, a lot of females who are, this is their second coming back to the corporate world. So you can certainly pursue Ayushi, and these days, there are a lot of excellent opportunities in the wealth space for CFP pass outs. Okay, and view on silver, well, that I'll of course tell you later, but let's just take a couple of more questions. Without Nishal G. So Nishal G says that without CA inter, one second, without CA inter, you can't fast track, right? Even though you have done articleship in BCom. Uh, can you just, I think you will have to share your resume, then we'll look at it. And when it comes to CFP versus CFA, Nishalji, my advice would be that CFP, is focused towards personal finance. CFA is towards corporate finance. Uh, if you ask me, I've worked as an analyst for many, many years. The CFA space is where you're seeing an impact of AI because a lot of basic analysis is being done using AI tools and AI tools. But when it comes to CFP, which is more of a human network, human connect, it's very difficult. You can see the DIY happening, but for the major goals, of course, people are not depending on them, right? So that is again one of my observations. And lastly, assistance with supervised, unsupervised articleship or CFP certification. Uh, it is supervised, but we can make it very flexible for you. So I have students who've completed their CFPs, but they are like based out of Hyderabad and Bangalore, and they're pursuing their articleship with me. So that is also possible. I'm an MBA finance. JP, you're an MBA finance. You can certainly join the fast track pathway, sir. Yes, today I'm done with I think I've completed all the chats.
No, yeah, just scroll a little bit.
Which one?
All right. So, friends, if you have any question, you can raise your hand. I'll unmute you one by one. You can ask your question directly with DC sir. You can interact with him.
Yeah, Vadiraja ji is here. Yes, please, sir.
Yeah. Yes, sir. Please go ahead.
Sir,
Great. You can also switch on your camera.
hello.
Yes, yes, sir.
Yeah, so this is on the ETF. The ETF is itself is a passive fund, right? So then, what is the point of index fund and ETF? ETF itself is a passive fund, right? If, for example, auto sector has some ETF, IT sector has some ETFs. It's a passive fund, right? Then what is the index fund and the ETF? It's more the same. My understanding, maybe I'm wrong, but I just want to clarify.
So one thing is on the cost front, ETFs are more efficient, right? Secondly, when it comes to commodities, ETFs have much more options compared to index or a mutual fund.
Okay.
Yeah.
Hello.
Yes.
Sir, no, I got it. So, but end of the day, it's both the same. That's what my understanding is. That is there too much of
See, in
difference?
terms of design, see, my dear friend, in terms of design, they're same. But one is
Hmm.
on the stock market, more cost efficient, more options available, and one is index fund, which is, with the AMC. So I gave you my
Okay,
perspective on both of
got it.
them. Yeah. So you
I
have to
got it,
take
got
it
it.
from
On
there.
the
Yeah. Yeah.
AMC level, you are speaking. I thought in
Yes.
the market level is what is the difference? It's the same. So only on
Ah,
the AMC level, it's difference. Yeah, got it.
it's different. Yes.
Yeah.
Ratna,
And
what is your question, please? Can you unmute? Kanaya, there's some background noise, I think that's coming in.
Just a moment.
Yeah. Okay, so I can see some questions. Ratna, you wanted to ask me, right? You can come in, then I'll answer some more chats, right? Ratna, please unmute, sir. I think we can go to Abhishek because I think Ratna is not able to communicate. Abhishek, yes, please.
Sir, how much is the total fee for the fast track course? I mean, including everything, including the subscription fee for PSP and the renewal fee also.
And the discount, right?
Yes, considering the discount as
Okay.
also.
Okay. So today's offer, Krishan, please explain.
After the offer, it is coming to 40,500 for the college part fees, right? Apart from that, fast track FPSB overall fees is 74,500.
So total is
Which
around,
includes the discount.
Yeah, yeah. In the fast track, already it is 40,500 plus
Okay,
74,500. It is coming to 1,15,000 overall for the fast track challenge
okay,
pathway.
okay, 1,50,000. Okay,
One lakh
and
fifteen
15,
to
thousand.
become the
15.
1 lakh 15, 15, 1 5.
1.5. Okay, and to become the member of FPSB, uh, what are the documents which need to be provided?
Uh, See, not much. They're going to just take your experience. You can just share your experience in terms of which companies you worked, and then I think just about your little bit your credentials. I think they don't really create a big fuss when it comes to giving the final certification. The major thing is that once you've cleared the exam and you've fulfilled every obligation, they are quite supportive on that.
Okay, okay, no problem, sir.
So just to inform you, we have just yesterday we have done the CFP fast track orientation, and the last week we have started the CFP virtual classroom weekend class for the regular pathway. So if you are interested, you can call on this number, that is 9711 43 777 9. My team is there. They can help you, guide you with all the details. Rishi, I cannot see any raise
Uh,
hand here.
Right. There are
So,
certain, if I think I'll just answer this.
sure.
Nitin Dang has asked that do you offer any, so you've already answered him, so that's okay. Ratnaji, for your list of ETFs, you can go to this website which is known as Dhan, DHAN. It has a very comprehensive, it has a very comprehensive tracker on ETFs. So you can use that DHAN. You can do it right now. You will see the entire category sector-wise list with all the returns and everything out there. It's a very good handy thing. And for Vadiraja D, again, I would say that mutual fund has its limitations and ETFs again has its, but if you ask me personally, yes, I feel that cost-effective long-term trend exposure in passives, of course, ETFs is the my choice.
All right. So with this, let's wind up this session. Rishi, thank you so much. Rishi, thank you so much, everyone,
Thank you
for
so much,
joining
Rishit
us
sir.
this
Thanks
Saturday. I
everyone.
hope we could
Thank
be
you,
able to make.
everybody. I hope we've got some interest in ETFs today. So thank you so much, and looking forward to meeting you once you're onboarded. Take care. So make a plan, make a decision. CFP is a very you want my number? Okay, I'll just share my number. Don't worry. CFP is a very interesting program and gives you a lot of insights into things and become a great advisor. I mean, I've seen major difference transition in myself as well. I'm just giving it, sir. It's now there in the chat. Thank you and thank you,
Thank,
Kanaya and Christian for organizing it. Thank you so much.
thank you
Bye.
so much,
All the
sir.
best.
Thanks
Bye. Bye.
everyone. Thank you.
Bye.